Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Monday, and we got a Federal Reserve meeting this week. And so far, it's kind of starting to look like the flows may be starting to come in and hedging for the meeting. And we have a story out by the Washington Post suggesting that Federal Reserve members are still concerned that they will not ever fully get a handle on inflation without some sort of a recession. So I'm just eyeing this here because I do I guess I'll be the first one. So let's come to the charts. So you can see here in the treasuries, we did have a little bit of a move up overnight. Maybe it's starting to roll over. And like I said, the flows here as the U.S. session starts are probably going to start getting dominated by hedging for the Federal Reserve meeting this week. ES also seeing a little bit of a jump overnight. It's starting to get tight again, though, right? The action is starting to get tight. Over here in oil taking a big jump overnight and getting all the way up to 77. Let's zoom out. When was that big? Oh, it's like way further back there. Yeah, there's been a lot of drama in oil this year, but so, you know, in the recent month, the trend is all along. Here we got gold and silver. Not looking so hot the past 3 days. That might look really nasty, especially there in silver if we have a down day for them. Kappa also struggling a little bit. Bitcoin. Ooh, Bitcoin taking a little bit of a dive this morning, huh? Maybe there's some piece of news that looks like there was probably a piece of news. And over here you got the dollar. The dollar briefly reaching above 101. So that's where we're at. Come back over here. Got a couple of things I gotta take care of here. Okay, well, they're already immediately fighting me. It still shocks me that the educated class is the easiest manipulated class. Scott Adams retweeting somebody I've never heard of before. That's interesting thought. I have to think about that one. When I'm looking at the flows here, I can see, you know, pretty consistent downtrend in the 30 and the 10-year, but not necessarily in the 5-year. So it looks like maybe some steepening, But well, let's see. You know, maybe the 5-year just turns down like the rest of them real quick. Seems a little quiet on Twitter. Brannigan Barrett, if it wasn't broken, why bother the risk of a rebrand? Talking about rebranding Twitter to X. Yeah. Elon wants to rename Twitter to X, and apparently from the things that he's tweeted, it's actually going to happen. Apparently he had a oh, sorry, we have some news down here at the bottom of the hour. I forgot. We have Chicago National Activity Index. Slightly lower than forecast. This is not a piece of news that we've typically been too influential, so in fact I can't recall that ever being on the slate before. Anyways, before PayPal, they renamed it. They had it named X before they kind of like threw him out. So apparently Elon just really likes that name. But yeah, I feel like that Twitter and the bird in particular is like brilliant branding, and I just can't believe that you would buy Twitter out and then change the name. Well, the name being like one of the strongest things. Why wouldn't you might as well just build your own thing from scratch at that point. Like, I guess you buy Twitter out because you don't want to compete with it, but come on. I like almost everybody else think that this X rebrand is silly. But I guess it doesn't really matter in the end. I guess the only thing that matters to us is, can we continue to use Twitter as the premier source for breaking news? We'll see. Surely another. It will. If it leaves, it will leave a hole, and somebody will come in to fill it, right? Okay, so the NABE is who polls economists. The economists are saying the chance of a U.S. recession are now 50%. Which was earlier, I think it was like 60%, right? So, I guess that's good. So even on this uptrend, I'm kind of getting some hints of selling in the 10 years. So in the note, let's just call it the note. Those bids seem to be pretty insistent, though. Okay. So down to, it's ticking all over the place. I'm not seeing like a significant amount traded at any of these prices. So I think that we're still kind of like in random, but there is enough of a trend in the cumulative delta that I'm seeing here in these instruments to suggest to me that there are some big guys at work out there. It's just not entirely clear what they're really doing here. I mean, it looks like it is a bull steepener, but that could switch really, really quickly, and that's why I'm kind of hanging on here. We're seeing a little spike in oil here. I think I should come over here and check about the cryptocurrency market. Iceberg at 15.5. Doesn't clear. Bitcoin Miami. See, it's looking kind of weak, but they didn't take it. Uptick. Uptick on basically no volume, too. All right. I guess I have to give up on it. If I see those buy flows come back in with the vengeance, I might take it again. There's a little stack there at 16, so it was an okay price. It really did feel like they waited for me to, because I was the first one, right? I was the first lot here in the micro. And then it started moving, right? Yeah, I don't really see. I don't really see anything from the Bitcoin community explaining the drop. It seems like these days that we don't figure it out until later. Was it because the halving happened? Kind of came back and it steps back up again. We're going to have to keep an eye on the dollar over here, because I think that kind of getting hints that it's in charge again. Well, when did the decline happen? About 2.5 hours ago. Dogecoin rises after Twitter rebranding. Do they think, okay, so they think that as part of this whole X app thing that they're going to make Dogecoin the primary like currency for it. That's what that's about. Oh, this is going to be a mess. Elon, what the fetch are you doing? Oh, this is gonna be a disaster. I don't. You'd think they'd actually do that? I don't think he'd actually do that. I don't know. I don't know the man. I guess I don't really know the man to say. Former FTX CEO agrees to gag order, including for all witnesses in criminal case. Dogecoin is pretty much being kept alive by Twitter and Musk at this point. Yeah, X rebranding is so ridiculous that it will never feel right using it to refer to a company. Yeah. So I am starting to, it's still consistently short in the treasury, in the note. The bond took a little bit of a stumble there. The 5-year is the one that continues to kind of hang out there. Still hasn't moved. A reasonable amount of volume in this area in the micros, though. Okay. And the other asset's not really moving. Oh, although one thing I did not note that we should note is that wheat and corn are up big today, probably because of disruption in Ukraine and everything, right? So that's... Could that contribute to inflation too? Well, if food prices continue to go up, that could be a problem. And there's a big, that big order is puffing up again at 15. Iceberging at 15.5 though. Just a little bit. Okay. Okay, so now there's two big orders at 14.5 and 14, although a little bit pulled at 14.5. There kind of appears to be some pushback here. Something seems to be asserting itself here. Yeah. There's still a little bit stronger bids than I would expect in this situation, though. Which, you know, if there is a meta order sell, which I am predicting today, that would be good for them. That would be good liquidity for them to just go and plow through. Plus it pulls like that. Oh, jeez, it all pulls. Okay. Well, it pulled, but they didn't hit it, so... But that liquidity was a little suspect. Interestingly enough, on this decline, you didn't see the cumulative delta come through. It was sell, 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 and then when it came down, it was flat. Good morning, Gus. Yes, Elon Musk's Twitter is rebranding to X.AI, leading to speculation that Dogecoin will play a larger role in the company. Bitcoin's decline resulted in a decrease in other major tokens. Analysts predict that the lack of bullish news and a quiet summer may continue to impact Bitcoin prices with a target of 27,000. Overall, the market is waiting for positive developments. It kind of is looking like that's going to be the big story this morning is Elon Musk. Well, maybe not. I mean, I'm here on Twitter, so of course people on Twitter are going to care about that more, right? I kind of figure that the big discussion today will be Barbie versus Oppenheimer. I tell you what, so it looks like Barbie did really well. I think they have a, I was saying maybe their second week sales kind of drop off. I'm not so sure about that now, because it seems like there was enough people that really liked it. But I don't know why so many grown men care about the Barbie movie, because it threatens the patriarchy, Uzi, of course. We're unconsciously triggered because we know that that threatens the patriarchy. That's what the feminists that support the movie would say. But so the issue that people have with the movie is that it starts out with like a Barbie utopia where it's like a reverse patriarchy where women are in charge and men are kind of treated like children, and then they go to the real world, and Ken sees the patriarchy and decides to bring the patriarchy back to Barbie world and creates an oppressive dictatorship. And then Barbie takes it back from him. But then at the end, they're like, okay, so can we have like equal rights and stuff? And the Barbies say no. And so the issue is at the end is that they don't ever show like what are the negative effects of a matriarchy? What is, shouldn't we have things be equal? And they said no. And so that's what everybody's saying is like the giveaway that this is like feminist propaganda to try and condition you into hating men and seeing the patriarchy and everything and everywhere and hallucinating the patriarchy, etc., etc., etc. Okay. But when I look at the average person going out and watching the movie, they don't even think about that. They're like, no, you didn't get the message of the story. The message is that we should all just be allowed to be what we want to be and that we both contribute parts and we should be equal. And then, and then they have the argument like, well, then why weren't they equal by the end of the movie? But the average person doesn't see it. That seems to me like maybe one of those things where it's like, because you chose to go and see the movie, you kind of imprint your personality onto it a little bit. And so you don't want to admit that maybe the movie had a bad message or something. Maybe that could be it. I don't know. Or maybe it's just not as heavy-handed as it seems from the synopsis and the people that don't like the movie, right? But that's where I'm like, kind of seems like it will probably continue to do well because enough. And then the feminist kind of types like really, really loved it. Like there's some of these, like I hate all men kind of really whiny feminists on TikTok. Oh my gosh. And they loved that movie. So I think it will probably continue to do well. There's a Brazilian prime minister started using the lack of tickets being available to advertise her own private show. Eek. That's crazy. I can't tell you whether or not I like it because seeing it as a Barbie movie doesn't register. Well, yeah. But I mean, like, normally I would probably end up getting dragged to the movie, right? That the wife and the girls would drag the whole family over, or at least they would have seen it, right? But there's like a bait and switch. So this was the one that I thought was really interesting from like the TikTok and everything, as there was some people saying like we're envious of people that lived on the coasts in liberal areas. And actually, I probably wouldn't get dragged to the movie. I would probably get stuck at home watching the babies. That's probably what would actually happen. Anyways, they were envious of the people that lived on the West Coasts because, like when they were watching the movie, people were cheering and all of this sort of stuff. And some people in the Midwest were saying that when they went to the movie that they saw large groups of people walking out in the middle of the movie. So it does appear that there was a large group of people that the marketing worked on them. They went to see the movie from all of the marketing and felt like the movie did a bait and switch on them. But you don't see anything in the media about that. You don't is that going to be enough to harm the sales of it in the second week? I don't know, but it's going to be an interesting cultural flashpoint to watch this next week and see how it plays out. I think one of the problems is that Oppenheimer is not like a objectively conservative thing, right? Like Oppenheimer is kind of about a guy that kind of he was a pacifist, right? And didn't exactly like how the nuclear technology that he developed was used. So I didn't get to see that movie either. Actually, what happened was we were going to have a pool party, and then a rat got in the pool, and then we canceled the pool party. And I cleared the afternoon for that. I could have gone and seen it that afternoon. But oh well. I just had my account locked because of the backing music on a TikTok video about a skateboarding dog. Tweeted back in August 31st. I wish Twitter would put more time into combating crypto spam accounts, to be honest. No, well, apparently having a rat in a pool means that you have to completely drain the... No, I totally understand it because that's how people get hantavirus, man. That's how people get hantavirus. I know that there's chemicals and everything, but I think the guidance is that you're supposed to be extra careful. And so you had to completely drain the pool, clean it out, refill it. From the Financial Times editorial being tweeted by Mohammed A. Al-Arian, it is worth remembering that in this uncertain climate, the pendulum between soft and hard landing scenarios has been swinging frequently. Has it ever? In the last year or so, the conventional wisdom for the economic outlook has gone from soft landing to hard landing, no landing, crash landing, hard landing, and now soft landing again. Yeah. That is basically exactly the sequence of events. When I was a kid, I used to catch wild turtles and swim them. Well, the turtles is different. The turtle doesn't have hantavirus. Oh my gosh! Every once in a while, TikTok will show me videos of people messing with snapping turtles, and I just can't. I can't handle it. So, oh, you're so stupid! No, don't touch that thing. That is like one of the most dangerous animals you can be touching. Ugh. Do you see? You have two snapping turtles. That's right. You have two? You have two? They're dangerous, man. They're dangerous. You seen this video of this guy in Florida, and he traps an alligator in the trash can, and then pulls the trash can down the hill and lets it go? And one alligator. Where do you how do you house those? Do they just happen to be, you have them in like cages and stuff? How do you have a really big really big environments for them. You're running a zoo over there. It's just a fish tank. But how do you? Wouldn't an alligator start to get too big for a fish tank? Even for a snapping turtle, isn't that like? Even if you had like a 200-gallon fish tank. Oh, not an alligator snapping turtle and a common snapper. Oh, I didn't know that there was a difference. Guess I've heard of alligator snapping turtle and snapping turtle though. What's the difference? Now we have to look it up. Difference between alligator snapping turtle and snapping turtle. The shell of an alligator snapping turtle has 3 distinctive ridges, while common snapping turtle has a smoother shell. And about those skulls, the alligator snapping turtle has a triangular head. The common snapping turtle has an oval-shaped head. And there's an article. Oh, it's a PDF. Why is it a PDF? It's a PDF, and it doesn't even have pictures. An alligator snapping turtle is a little bit more scary. This snapping turtle looks a little bit more like Godzilla. Whereas this snapping turtle looks a little bit more like Mothra. Well, so we kind of had some interesting movement. The 30-year is still kind of sitting down there at the lows. But right now, at the moment, the action kind of seems to be suggesting to me that the trend and meta orders that I was anticipating is not actually there. Now, we could try and hold on, like it could still come, but this doesn't look good for the short trade. It's kind of looking like sideways for now. Maybe there's a change after the S&P 500 opens up. And in fact, they actually have traded back up to 16 again, so. Oh, check your DMs. You have pictures of them? Oh, yeah. Oh, they're not nearly as big as I thought they'd be. That is not nearly as big as I thought it would be. So that one must be the alligator one. That must be the regular one. Or is that the same one? That might be the same one. I can't tell from the angle. No, this must be the regular one. Yeah, that's the regular one. Am I right? Am I right? Did I learn from the internet how to identify an alligator snapping turtle correctly? Like having a fish up for a more of an interesting conversation. I really want to get saltwater fish. I tried to justify it to my wife. I'm like, look, they could fit right here. She's like, I don't think she wants to put in the work. The thing is that what she remembers was a lot of work, and she hasn't gotten into it since all of the cool technology has come out that makes it easier. So. WorldCoin is launching today. I'm surprised that people still try to put together large coin offerings these days. My gator snapper is pretty big. The pics don't do it justice. Whenever I do water changes and get to see him in an empty tank, it blows me away how big he's gotten. They're great garbage disposals. Oh, yeah, that makes sense. So, okay, D1 was asking me for an add-on, and I was, oh, okay. Dogs hunt moles, turtles eat them. Oh, jeez. Maybe I should get one of these snapping turtles. Too bad I live in a desert. So I gotten some moles too. Okay, that turned back down really quickly. So there was some actual selling in that one. Much more so than last time. No, so one of the things was with the dog is like the dog is supposed to eat the food off of the floor, right? The dog, you put the food on the floor, the dog eats it, the child doesn't get to it. Because the child, both of the children, keep getting into finding stuff on the floor to eat that I would prefer that they not touch, you know? And the dog doesn't do a good job. Actually, he just doesn't eat. Every time I put the food out, he's just kind of like, meh, okay, whatever. Like, when do you eat, man? They're easy to take care of. The dog is a little bit... The problem with the dog is the dog demands a lot of attention. You cannot just sit down. He wants to play with you. He's gotten to, I will pounce on your stomach to get you to try and play with me. Ugh, it's so annoying. It's so annoying. And then my wife is like, nah, he's not a cuddly enough dog. We need another dog. So she wants to get a second dog. Because she always had two dogs, and I don't want a second dog, but I think at some point we're probably eventually gonna get a second dog. It weighs 110 pounds? No way. Oh, your dog weighs 110 pounds. Never. Oh, I thought you were still talking about the turtle. I was like, what? The turtle weighs 110 pounds? What the hell? Yeah. Papillons are really smart dogs, and they need a lot of stimulation, and sometimes I don't have the heart for it. Triple the work. Double the dogs, triple the work. I don't know. Part of the problem is that the wife just doesn't seem to sit down. Like if I put a show on, she's getting up every 5 seconds. She doesn't actually watch the shows right now, right? That's right, you have huskies. So on the bid here, you can still see them playing around with the limit orders, right? Anthony Crudelli tweets, amid a week filled with discussions on earnings and the Fed, my attention remains fixed on commodities, particularly oil, provides a comprehensive analysis of the landscape for traders in their blog. Remember, it brings up a good point. Oil is up. Wheat is up 6% today. Corn is up 3%. Oil is up 1.5%. Where's NG? NG is up 0.11%. So copper is the only one that's not doing super well. We still kind of see China, lagging. But it is kind of looking like maybe this next leg of the Ukraine war is leading to inflated prices again. Because, man, I gotta tell you, it really seems like Russia just wants this to become a full-blown conflict with NATO. It really feels like that. Because, what were the headlines over this past week? Okay, they scrapped the wheat deal, and started threatening ships that were coming in through the Mediterranean Sea. And Western governments even suspected that they might start laying mines in that area. Okay. Then meanwhile, Lukashenko over in Belarus is saying that the guys from Wagner that have been in his country since the whole Russian invasion failed coup attempt thing, he says that they are just begging to go and invade Poland. Which is like, why would he say that? It's just like, I'm kind of wondering if this is not one of those escalate then de-escalate sort of a thing. So I always thought the beginning always seemed like that's what was going to happen sort of a thing, right? Like that's the way Putin loves to play it, is he escalates things and then de-escalates and creates peace, right? And as long as he can do it in a way that saves face, right? It really feels like NATO wants to be in full-blown conflict with Russia too. Well, I don't think that NATO ever thought that Russia would be stupid enough to react the way that it has, right? I think NATO thought, well, we can continue to pursue our own selfish interests. And yeah, Russia won't like it, but too bad. What are they going to do? Right? Escalate and then de-escalate. Yeah, I feel like it's a particularly Putin-esque sort of thing. Joseph Wang, all but the largest banks recently reported notable deterioration in their NIMs. The first aggressive hiking cycle in decades, quantitative tightening, and recent rapid loan growth are creating a new environment that is challenging fundamental deposit assumptions. How many wars have you seen Putin fight? 3? Yeah, I think there's been 3, right? Because there was the Crimean. I guess that doesn't really count as a war, but there was Georgia. There was when he moved into Georgia, and then there's been this ongoing thing in Chechnya, right? And then you go further back than that. There's the wars that I guess I'm familiar with, but wasn't really paying attention to, like Afghanistan, right? It's kind of funny. The USSR has probably been involved in as many proxy conflicts as the United States has, right? And they tend to go the same way, where they don't necessarily work out very well. I don't know. It's kind of a hard it's kind of a hard thing to analyze, because ultimately we like in Afghanistan and Iraq, right? Ultimately we pulled out. So I think most lay people would say that the United States failed in Afghanistan, right? But you kind of have to consider what was the positive impact of that during those times. It's a little bit more complicated than that, I don't know if I should read that one. I'll read it. We're the only country on the planet that nuked 100,000 people and still managed to make ourselves the good guys? Wow. That one's been argued to death. I don't think man. So I saw some guys. So what is this guy? What is his name? There's this Aussie that is his specialty is military history, and he goes into that one, and it's really good. But you know, that one is a much deeper conversation than I thought it would be. Although he still came to the conclusion that they did save lives by using a nuke. So I don't know. I think the issue that you get with analyzing a lot of these geopolitical events is like when I look at people on average, they're quite random. And I find that incentives and so forth tend to predict outcomes a lot better, right? Okay. But when you got an instance like this with Putin, you kind of have a person where like he's in charge of all of the incentives, you know? Like the ability for the West to put pressure on him in order to force him to do a certain thing is really quite limited, right? And even though they will put like economic pressure on them, you know, and it has hurt Russia, but they've weathered it pretty well. So they don't really have a whole lot of leverage, right? So now you're in this situation where you have to predict what this one person is going to do based on their psychology and ideology and everything, right? Who knows? Obviously, we got it wrong because we did not think that he would invade Ukraine, right? We didn't think that he was crazy enough to do that. Oh, I think you'd have a hard case to make that the Japanese were the good guy in World War II, right? Because it was totally Japan was just like, hey, we need to become a world power. What do we call it? A world empire too. Let's start taking things over. The thing that's unsavory about the history in this instance was that like the real decisions were made in World War One. The real decisions were the ones that led to World War One, and World War Two was really just dealing with the terrible fallout from World War One. Because that's the way that I think about it, right? So, you know, if you were going to make an argument about how the history had been distorted, right, and what were some decisions that were made that should have been done differently, I would lay the blame squarely at the feet of the French at the end of World War One, who were really quite vengeful about the whole thing, because really, like, the Germans at the end of World War One, or the Germans almost won, like the Germans were like winning, and they offered the French like very favorable terms to end the war, and the French refused, and then the Americans got involved and pushed them back, and so then when they completely defeated the Germans, they chose to have the most burdensome, oppressive terms they could possibly come up with, right? And that's what set the stage for World War II to happen. You know, what, a few decades later. So, like, there's definitely things in the history like that, but I'm not convinced that the use of the nuclear bomb and what happened with Japan is one of them. It's definitely the case that, like, Roosevelt kind of, like, primed the American public for a war, right? Like he felt that we needed to get involved, and he was slowly doing things to prepare the United States to be able to get involved, so that when he finally had an excuse to do it, he could do it. That happened, but I think it was inevitable that they were going to get involved anyway. So, easy for us because hindsight is a blessing. Well, I mean, when I look back at all of the wars that have happened in like what we would call the modern or postmodern era, basically all of the conflicts that have happened post World War II, I don't think that you can, in any one of those instances, say that there was a clear winner. Like, especially not with the ones that the United States was involved, right? So there was the Korean War, and then there was the Vietnam War, and then there was Desert Storm in Iraq and Afghanistan. You know, Desert Storm, and then going back into Iraq afterwards, and now Ukraine. And in every one of those instances, you could make the case that the United States had strategic interests at stake there to some extent. But then in the end, like, we ended up pulling out. So, like, how much did we really protect our interests? How much did we actually get out of those wars? Because I don't think that anybody believes that we got our money's worth, at least. You know what I mean? Judging, like, what is winning and losing, not as much of a straightforward thing. Right? And the issue remains, I tell you what, like, you can tell. So I was watching, this weekend I watched Captain Phillips, right? So I think Captain Phillips is, like, such a good example. So, like, these pirates, they kidnapped a captain, and the U.S. Navy pulled, like, 3 boats and a sniper team, and then you know, sniped these guys from a boat. And the whole thing is just crazy, right? Why would the United States go to that much trouble just because it was one of their own guys? Well, there's that too. But, you know, there's been these situations where, like, Americans have been captured by foreign nations and held and that sort of a thing, like with Russia and so forth, right? They don't treat it with the same seriousness. In fact, a lot of people, one of their big complaints about some of the Democrat presidents is that they don't take those situations as seriously. Well, I'll tell you why. Because it's not about the person being held hostage. It's about U.S. maritime power. Because it's the U.S.'s prominent position in the world and their ability to trade freely with the rest of the world that gives us, because I'm from the U.S., that gives the U.S. its economic power. So if pirates think that they could get away with piracy, that would threaten that balance. So this small little band of pirates were in a way directly threatening the base of U.S. power, and that's why they came down with overwhelming force. Right? It's setting a precedent. Yep. Well, yeah, because other countries did let pirates get away with stuff before that. That's the thing that nobody ever talks about, was that there was like a Belgian and a French boat, I think, that paid the ransom. And the U.S. was like, nope. And that was the end of that. After they killed those 3 guys, that was the end of that. Never heard about that thing again. Right? So here's a couple of things that are going on right now, though, right? Okay, number one, Russia is saying that they're not going to be allowing the commerce coming out of the Mediterranean Sea. We're thinking that they might even lay mines there, right? Okay. Then with Iran is kind of like attacking shipping vessels in the Strait of Hormuz, right? So those are serious provocations. Those are countries saying, we know where your power is and we're going to start trying to challenge it, right? You're not necessarily hearing a lot about it on the news, but I guarantee you that all of the people over in the Pentagon and everything are like pants on fire about this, right? So going back to what started the conversation, this Ukraine wheat situation is a serious issue that is the market is sleeping on right now, right? because eventually you get a headline like EU shipping a vessel destroyed by Russian warship, right? If the Russians really were crazy enough to go take it that far, because that's what they're kind of threatening to do, right? Then shit would really heat up, right? Let's see here, Francesco. 40C outside doing some excellent work. Oh, hey. It is way so hot here in the US. You're lucky. It's only, well, 40 is, what is 40 in degrees? 100, oh, it is 104. It's hot down there too. Yeah, it's hot. It's hot. It's hot. Wait, you're Francesco? I can't remember. Francesco is one of our friends in South America, right? Hey, that move was a little bit more extended than what we were looking for. Oh, southern Italy. Ah, I gotcha. What was happening in Italy recently? Oh, no, I don't think that was any. I think I remember some conspiracy theory thing about the mob and stuff that was like kind of silly, ridiculous, but no, I think that the thing today was in Spain, wasn't it? There was like elections in Spain. Or what? Let me look. That is maybe kind of slightly important. Slightly. Spanish, yes. Spanish election fails to deliver decisive rejection of socialist prime minister. Conservative plurality without a majority may necessitate another election. Dude, the way that stuff works in Europe, it seems so crazy to me. It just feels so convoluted. You don't necessarily know when the next election is, and it's so convoluted, man. And then there's all these people in the United States that are like, oh yes, we need to move over to a system like that. Oh, okay. So do you want your government to be more like the European governments? Because I don't. No offense, EU, but it's just not us. Today they arrested around 80 mob bosses. Oh, okay. So that is what I was talking about, but there was something about there was like a document that implicated mob bosses in something that was actually like a big conspiracy theory, and that's crazy. 80 mob bosses, huh? Let's come here to Zero Hedge here really quick, see what they have since the opening. Goldman, it doesn't feel like many are left fighting the rally, I bet. I bet. Brannigan Barrett, weekly dollar index. I will be talking about this chart tomorrow. Oh, okay. So you're not going to tell us anything important. I have seen, like, most of our major traders and stuff that I follow on Twitter have been saying something this morning. I felt like earlier it was quiet on Twitter, but they're coming in. It's Federal Reserve Week. Everybody's got to get their opinion out. Do I need to work harder, guys, on the social media side? I don't know. I'm just not finding the motivation anymore. I finished that video. After the stream, we'll have the video about volume profiles, so make sure you go and watch that one. Ah, man, like when I did it before, like last week, and I wasn't able to finish the last little part of it. I thought, oh, I probably just got like 30 minutes of editing. No, it was like 6 hours. It was like 6 more hours to edit it. Probably took me longer than I needed to, but there was a couple of spots that didn't flow as great as I wanted to, because the original script was a lot more aggressive than what I wanted in the end. So, because like the strategy doesn't work, but there's kind of stuff in there that kind of suggests that they might have something with volume profile, and then we kind of go in and explain why, and how you can actually like incorporate it a little bit better. So yeah, that was probably part of why it took so long. But now I made that one. I guess we need to make one about smart money concepts, because we talked about that, right? I think that would be a good video. And then after that, I get back into I don't want to make a video. It's a lot of work. A lot of work. And then on top of that, I'm supposed to post on TikTok every day and make all of these great tweets all the time. I'm actually seeing some buying here at the lows in ZB. It's running into some iceberging, but it is there. Oh, okay, let's read this. Tony Pasquariello, head of hedge fund coverage at Goldman Sachs, spent most of the week in the UK. In short form, here's what emerged from a large set of meetings. Looking outward, there is now a general acceptance of, if not concession to, how well things have played out in the US. Specifically, folks are genuinely struck by how the American labor market has performed. Framed another way, if you had asked at the outset of this cycle if the Fed could break the spine of core inflation without breaking the labor market or the major assets groups, the odds would have looked very long. So that core story has clearly underpinned the powerful drive higher in U.S. risk assets. I don't think there's much of a question there at this point, while noting that subscription to this rally felt a bit recent and a bit reluctant. Yeah. Here's what I mean. I went to the trip with the view that the discretionary community was carrying a +6 on a scale of -10 to +10, and I came out thinking that's about the right zip code. It doesn't feel like many are left fighting the rally, nor did I encounter a fund that felt overly long. In a way, I'd characterize sentiment somewhere between relaxed on the downside risks, yet reticent, I don't know how you say that word, to play for real upside. Where the judgment is much tougher for people is what's the directional trade in U.S. rates if the disinflation without a recession narrative persists. In that context, I admit to having no strong instinct on whether one should be receiving rates or if one should be paying them. Receiving rates into a presumed cutting cycle when inflation has been beaten back, or paying them given a remarkable durable trajectory of growth and decent slug of cuts already priced into 2024. This attendant question came up a lot. What is the Fed supposed to be doing next year if core inflation has a two-handle on it and real rates hold firm, yet the U.S. economy continues to grind forward? Given my confidence in the underlying health of the job markets, I suspect that their reaction function will favor letting things marinate at restrictive for a while longer, as distinct from cutting for the sake of cutting. In the context of the Fed, the 2024 U.S. election makes handicapping the sequence of next year a harder exercise. It also makes handicapping U.S.-Ukraine outcomes more difficult. Given how tectonically important they are, I should note that neither the U.S. election nor Russia-Ukraine came up much in conversation. Yeah. Well, it came up in our conversation today, though, right? What did come up a lot? AI. I say that noting client conversation didn't render much new thinking on how to prosecute the theme outside of the central plays that folks are now attaching to. Witness price action in options and market activity in Microsoft following the pricing announcement on Copilot. A related question that came up over and over again: if the S&P were to run into year-end, would it be led by the Big Seven or the field? I'm inclined towards the former. Note that the other bits, particularly lower quality consensus shorts, have already been squeezing for the past 2 months, and I suspect you'll get location to add mega cap length as the summer becomes the fall. Okay, things came back to the lower end of that. A bias I like coming out of the trip: short SX5E versus the US or Japan. Given the weak China cyclical impulse and the European industrial slowdown and a stall of earnings revisions, I cannot work out why Europe has performed so well this year, outside of taking out the recession tells thanks to the gas market. And I did not detect that folks will defend length in the region should SX5E turn lower. Here I should flag that SX5E is at a highly interesting technical point. Note how the 4400 level has acted as resistance over and over and over again. The UK remains a wildly interesting economy and a complex asset complex. While I was there, highly anticipated inflation report printed to the downside and took some steam out of consensus positions. US retains the view that the Bank of England will hike 50 basis points in August and the terminal rate will reach 6%. This goes on. Okay, I don't know what you got there. On emerging markets, I will register the framework of an expert, even though I'm not fully on board. In the central scenario, emerging market assets should perform well. Several countries were a half a step ahead in the monetary cycle. The growth profile is better than DM. The world is solicitous of carry, and quietly, markets like Greece, Argentina, Eastern Europe are performing well this year. Now, should China get things back on track, which, to be clear, is not really my view, then you have the makings for some real upside convexity on the emerging market complex. Gold, this one seemed clear. Folks want to buy a breakout, which is the sentiment I share. Bigger picture right now, risk-taking capital deployment in the macro space feel as low as it has been since the entire COVID area. It's interesting he says that about gold because, you know, gold continues to struggle a lot. So, but I do think that, like, on a breakout, people want to buy it for sure. That's how I feel too. It's just, that's not the way the market's been moving, right? Morning mission. There's clearly risk in the GPY complex compared to the start of the year, but the July 28th Bank of Japan meeting came up a lot. While guessing the tactics of the Bank of Japan at a given turn is very difficult, anticipation of this decision is much higher than recent meetings. To register the house view, while uncertainty is high and leaning against consensus, Goldman is sticking with a call that yield curve control will be adjusted next week. That would be a big deal, right? Finally, on the dollar, most of my conversation skewed bearish in the context of U.S. outperformance and a very durable growth trajectory, so it is obviously a short question mark. The dollar, short the dollar. To scroll back where I started, this was the most interesting thing I read all week. Official data indicates that domestic demand growth picked up sharply to 3.5% annualized in quarter one, and with 2 months of data in hand is tracking at 2.6% for quarter two. High-frequency data from alternative sources is also upbeat. We seasonally adjust weekly credit card spending, housing demand, and industrial freight indicators through July, finding that, and the bold part, U.S. consumer spending continues to grow. Manufacturing activity is currently bottoming or rebounding, and the large declines in housing activity appear mostly behind us. Thanks to George Cole, this is a chart that caught folks by surprise. The pickup in U.S. manufacturing spending, both nominal dollars spent and the percentage of U.S. construction that's compromised by manufacturing. While one can argue this is less organic and mostly thanks to IRA and CHIPS Acts, it shows the power of government subsidies. In other words, even though manufacturing has been doing very poorly, there's been a lot of investment in manufacturing. And that has been helping become oh, that's interesting. So in the end, we did get that supply side stimulus like long after the fact, and that is kind of sustaining us instead of tightening things. I think it would have been better if you had done the supply side stimulus at the beginning, but okay. And more than just chips, but you got the chips and deglobalization underway, and that's having that could be why the US's economy is so resilient. Okay. So what was Francesco saying here? Regarding politics, the system here is actually way simpler than in the US. Elections are every 5 years. 5 years, then we elect parliament, and then parliament elects the government. The government, meaning the president, the ministers and so far, can change, while parliament mostly stays the same for those 5 years. It doesn't look that stable from an American perspective, but then again, I think it's quite a good representation of the people here. Oh, yeah. Well, in the UK, it's different though, right? In the UK, it like changes. Like they can call for new elections and stuff. It gets weird, but well, you getting that pullback there. I don't know if I'm too happy with it, but I mean, the session overall, it looks short. It's only 7:30. Well, the S&P 500 only just started. The open looks pretty bullish, though. But I mean, as there, when you know, it's been making those jumps on the open a lot. It's almost like you're trading the E-mini. It's like playing the open is like would like cancel out everything else. Assign people the job of perceiving problems, give them time to investigate, and make sure they have independent reporting lines so that they can convey problems without any fear of recrimination. Interesting. Oh man, that came back so fast. The Treasury. I look away for like 5 seconds and it jumps up another 3 ticks. There's some buying on that in the 5-year for sure. Forbes, X videos trends on Twitter as platform's new name draws comparison with adult video site. Oh boy. Mr. Musk, I don't think that Elon regularly watches my maybe he's heard of me, maybe. But Elon, I would really highly recommend against this rebranding. It's a bad idea. Keep it Twitter. Morning, Gary. I'm like, aren't you a little bit late? But then I'm like, well, the S&P 500 is opening up. I guess that's about the time he comes by. I don't know. I have seen some signs here that like there's some large players in the markets. I mean, like the 10-year has been pretty consistently sell this whole morning, but the way that it's actually moving around is just kind of like market maker shenanigans. And we continue to get like these bids that show up here. You're starting to see a little bit on the offer side of that too, but for the most part, the bids continue to be a little bit more dominant. So I suppose it could be that you are getting a large sell meta order and that the market makers and or somebody else is just kind of taking it on. So we have a two-way market that is just one side is being active and one side is being completely passive. That could be. I should keep an eye here at 14. Might get stuck there. Let me read about this fentanyl deal with China. Okay, so the U.S. lifts sanctions on a Chinese police forensics institute suspected of participating in human rights abuses in exchange for Beijing cooperating on the fight against fentanyl. 30-year just shot right back down there. This is like a real head fake. There's the 30-year goes to new lows. Well, Seth, aren't you happy that you're still short? You bet you I am. Jeez. Now, I think that was only a new low by 1 tick over here in ZN. For the ZB, though, they just got creamed. We are retracing the overnight stuff. Like overnight, there's like a spot at 09 here. Trading your main job? Oh, no. I have a day job where I do site reliability engineering. So I gotta tell you, this is a thing. Every time that it comes up, I have to go into this rant because it's something that really troubles me. But trading is not a very effective wealth generator from scratch. Which is to say, this idea that you're gonna come in with a tiny account and slowly build that account over time and become a millionaire from it is pretty much a fantasy. Like it doesn't happen. Unless you get incredibly lucky, right? But if you already have a ton of money and you come in and you trade it and you know what you're doing, then you can really do some amazing things, right? So it's a really great wealth enhancer, but it's not necessarily a very good wealth builder. You know what I mean? So yeah, you want to have a good day job, and tech is one of the best places right now to get yourself where you have enough excess capital to do something like futures trading, right? Can you hacking? I mean, I'm gonna say no because I just don't do that, but I guess I have some skills that could be considered a hacking. I used to be a little, my job used to be a little bit more active in that space than it is now. Maybe I'll start to be getting more into security stuff, because my old job, they had a team for security, but it was a new team, but this one, I'm kind of going back to what it was before, and so SRE might be a little bit more involved in security than if we had a fully dedicated security team. I don't know. How come I did with fake money? Well, that's different because you don't have to worry about the impact of your trades, right? You have a friend of a friend that is a pen tester. Dude, it's an interesting space, especially the progression of it in that space, because like you start out as pen testing and stuff, but isn't as fun as it is often portrayed. Oh, no, for sure not. It's difficult work, but security pays pretty good. I mean, if you're especially security is one of those places where in the beginning, it's kind of rough, but if you've got like 10 years of experience under your belt, you can make a ton. But it's the same with site reliability engineering. Usually you don't get into site reliability engineering until you already have many years of experience, but yeah, in site reliability engineering is pretty good. And if you live frugally and everything, then you can have a pretty big chunk of change to play with. Okay, we do. So we're going to have a manufacturing PMI here in a bit. So, not necessarily. This is the S&P one, by the way. So, it's not the end-all be-all of everything, but it does look like it's going to move the market here, and they're pulling a whole minute early. I don't like having a position going on into this, but it's like that's what's going to happen to us. Manufacturing number, we're looking for a reading of 46.2. That seems a little weak. And given some of the stuff they were just reading, I would kind of suspect that some of these numbers might be a little bit better than expected. So let's see. The market is definitely pulling more than I anticipated for that number. Oh, did you see that order? Ooh. Whew. Well, that's interesting. How come my tape didn't pick that up? I saw very briefly like a 7K order there, but it didn't get flagged by my indicator. Okay, so we got 49 versus the expected 46.2, so I called that one pretty good. But services PMI was 52.4 versus 54, so still an expansion, but much cooled down, and so we get composite slightly worse than expected, 52 versus 53. So that is actually a little bit mixed, and that's maybe why you're getting a little bit of pushback against this. But the manufacturing heating up could become a real problem, right? Oh, that's gonna... You know, I tell you what, the way that things play out, it always ends up being so ironic, right? With the markets. It's like, oh, we're concerned about the economy going into a recession because of manufacturing. But then if manufacturing actually starts to do well, you know, that's like really, really bad. Okay. Well, I don't know. They're pushing against that initial reaction really hard now, right? So if we had moved as far as the futures did, I think that I could have gotten 383. But now almost that entire downside is being retraced, and we're coming back up to the high end of that range. And it appears to be driven primarily by buying in the 5-year. It's definitely trickier than normal. Well, I mean, I think that I had the overall play right, but like, what do I do now? How do I manage it? Right? I guess I could have tried to get out of that trade. I guess I could have gotten the 20, but I just didn't like the liquidity. I kind of get scared about hitting into when there's like no liquidity, but I could have done it. But after that, so I think what's going on here is that even though the manufacturing was really good, because services was worse than expected, they're reading that as dovish, right? So I don't know if it's trickier than usual. I think that as a driver of flow makes a lot of sense to me, right? It's just a question of like, how much flow will there actually be from this? And you got to be careful because those bids behind us are, I doubt, are very firm. Right? Oh, there you go. So now that everybody's kind of made their trades, let's just see where things kind of settle to. The initial gut reaction moves. But again, what I'm seeing is that the 30-year continues to be heavy. Like the larger thing that I'm seeing is that they are selling the 30 and buying the 5. The spread is not changing, but it is definitely there in the flows, right? What's this? Donald Trump upset that the Senate has not impeached Joe Biden yet. What does that tell us? I don't know. Well, I guess I'm suggesting that there may be a move in the spreads here kind of hiding, ready to happen. Okay, well, still quite, what is the word? This is like making me seasick kind of behavior, right? I think the issue with this one is that there's like the knee-jerk reactions are kind of a little bit confusing, but it looks like in the end the knee-jerk reactions that the buyers won, even though that wasn't like what the initial one was. But when I go into that, I think that the actual long-term consequences of that is a little bit more nuanced, right? Which kind of should make you wonder how much that particular piece of news, how long that can dominate the flows, right? Seems like summer is not yet upon. Well, we've definitely had summer days though. I'd say that it's definitely more of a summer market, but it's been a more active summer market than usual, hasn't it? So the thing that's weirding me out still was that when that news hit and they sold, there was a 7K offer that placed itself somewhere around 112.10. Now, it wasn't all at once because my market depth tape did not catch it. But somewhere a huge offer got put on and then pulled. Okay, that's interesting. Now SPOOs are selling off. Bank of England 20-year gilt buyback cover offer ratio 1.86, previous 1.5. Oh, okay. Now I'm seeing RNC research posting about Biden denying I've never spoken to my son about his overseas business dealings, and some of the transcripts that we've gotten recently that prove that was a lie. So on the political side, one of the things that we have to be wondering is how much Republicans are going to push that, because so far they have kind of only, I mean, like they've brought it up, but they haven't like really put it front and center as the, you know, we're going to push to hold Biden accountable sort of a thing. They seem reluctant to want to impeach him. And if they go into impeachment, that changes the political landscape considerably, although I don't know how that actually ends up, but it looks like the market already knew what it wanted to do prior to the news, and the news just accelerated that. Perhaps. I think you do have somewhat of a point where maybe some of that selling flow that we saw before the news was trying to front run the news. But the counter I would put to that is that the news wasn't really so straightforward, was it? Because the manufacturing PMI was much better than expected, and the services PMI was slightly better than expected. We have 3 central bank meetings? Right, well, that's the way it goes. Okay, so now ZN, the note, is getting back to the levels that we were at just before the news. I can see here once again that sell flow come into the note. Yeah, UB selling. It's like the long end is selling a lot harder than the short end for sure. See, the thing is that the original basis for this trade, I did not think that piece of news was going to be a super significant factor, right? I was going for slightly higher rates in because of what Nick Timros said this morning, and because there's a Federal Reserve meeting this week, and I think that people are going to have to hedge themselves against the possibility of higher rates. So at this point, I've made $20, although I had a loser earlier, so I think I'm only up maybe like $7 or something like that. But is the trade wrong? Was the trade wrong overall? Kind of seems like it is. It kind of seems like I was wrong, but I made money anyways, right? Or maybe I'm right and I just need to be more patient, right? Oh, the conundrums. You see, I've had a much more difficult time managing the trades once I'm in them lately, huh? So we just haven't been getting those clear offloading points lately. Because he made money, that's why the market is wrong and you're right? Maybe. Okay, interesting. So there was a little slip there in E-mini. Yeah, the market is wrong all the time. I guess that comes back to this whole thing that, like, the belief that current prices are reflective of all available information. And so we say if the price is not reflective of all available information, the market is wrong, right? So if you were to take that perspective, then I think you could say that the market is always wrong, right? But I don't believe that. I think that the way that I would approach it is that the market is neither right nor wrong, because the market is not necessarily trying to make some sort of a judgment about things, right? Why do I say right at the end? It's just such a habit. It's just a record of the people buying and selling. Right? We don't want to try and what is the word when you apply human traits to an object? There's a word for it. Anthropomorphism. Don't anthropomorphize the market. Oh, anthropomorphism versus personification. What's the difference? Personification is the attribution of human characteristics to abstract ideas, natural phenomenon, and okay. So I think personification is the more correct term. Thank you, Naz or Salim. Moroccan Technologies. Love it. There is still a lot of level 2 activity. There's a big bid there at 11. Making me a little nervous. S&P 500 fighting here. I look nice today. Is it because I'm wearing a watch? Yeah, I have a lovely watch. course, you can see it all the time. That's why it, it's gives me so much more gravitas and oh, okay, don't like that. So once again, every time that we see like these little uptrends in the note, it's not accompanied by a change in cumulative delta. So that's why I'm holding on to it, but it's coming back enough now that I'm just can't handle it anymore. Oh my god. So like, well, now I think I'm gonna try and hang tight here a little bit because that was a little too fast. Obviously, I'll be really upset if they just go and bust eyes there, but I'm willing to take the risk here. Probably when it got back up to 382, I should have taken a profit, maybe. Because that's when we were saying, well, seems like I made money even though I was wrong, right? There's a little bit of an iceberg on the bid there at 14.5. That's interesting. It's about equal to that big order that we'd seen down at 10. Oh, no, it's still 12.5, huh? It seems like the bid is there. I'm wondering if this bid is coming in from like hedging against the S&P 500. I mean, the S&P 500 did sell hard there, but it wasn't just, I mean, it was just retracing the pre-market move and everything. So I don't know if I can read too much into that. But the big thing that I still continue to see here is that there is a lot of level 2 activity in the treasuries in general right now, right? Yep, it's moving on orders pulling, yep. But the thing is, I don't know, we just had news, right? It's being a little bit volatile because of news. The flow that I'm watching and that I've been relying on is still short. So, I don't know. It may be the case that, you know, my original theory was correct and that there's just too much else going on to make too much money off of it, you know? Now, because it kind of came up like that, you know, I would say that the bids are probably still weak. But let's see. The bids are probably still weak, but I'm not seeing those market orders coming in aggressively. Nor am I really seeing like, well, okay, so there was the dollar. This was the dollar, right? Yeah. Dollar moving up, coming back. Yeah, probably it's the dollar that's moving us, so. Crude oil is rising. Oh, you're right. Good call. Crude oil continues to move up. You know, on that note, that just brings me back to my other thinking here, which is I'm not sure if those PMIs are that important. And I'm not sure if those PMIs that the services PMI coming back really helps us. right? Because I think that the argument right now is, can you really get inflation consistently back to 2% without having a recession, right? That's the argument right now. That's the thing that the guys at the Federal Reserve are kind of battling out. Ergo, for this week, if you have to hedge, almost certainly you have to hedge against rising rates, right? The zero data expiration has skewed the data and informational overflow. Well, I think that the zero data expiration nonsense, if we want to call it that, definitely makes trying to read what the equity indexes are doing much more difficult, doesn't it? Yeah, so they can take that 14.5 offer, but nobody hits 14. The overall activity level has kind of slowed down a little bit now. Donald Trump says The Undertaker had the best entrance ever. Okay, so they did take 14 and only with 581 contracts. Good offer. It's 13.5. So we're still in a pretty illiquid market, it seems. Okay. Okay. Was that just now? No, that was in ES. Okay. First squawk, nearly 30 ships drop anchor around Ukraine's Izmail terminal after Russian Danube strikes. According to ship tracking data, further 3 ships halt sailing in waterway leading to Ukraine's Reni port. Reason unclear. Coming from shipping data. So there we are getting some alternative data that are suggesting something is going on. And remember, wheat is up 6% today. Wait, ChatGPT said this? Seth's fund is outperforming Sachs scouring funds. Sachs are seeking to help Seth to bail them out and buy out all of their assets, says Chat. Okay. I'll let Goldman buy me out. Or are they talking about Goldman Sachs or just Sachs? Because there's that guy on the All In podcast that's named Sachs. And so whenever I see that, I'm confused. Okay, activity has died down a little bit, but when I do see orders flipping around and everything, it's a lot. So it seems like there's a lot of robots active here in these treasuries right now. And there was a brief little dip there. They came back into, I guess, what you could call the liquidity hole at 14.5. What's this? I don't know who this guy is, but my wife is really engaged in Arabic Twitter, and she says every single Saudi she sees has a blue check now. Got to be something to play with there. Well, that is interesting, actually. Markets are in flux due to higher rates across the curve. Short end is so or such negative yielding. It's screaming so loud. The back end is so flat. It's dead. They definitely sold the bond a lot harder than the rest of the curve. And it does kind of looks to me like maybe what happened was this sold. There was like the knee-jerk reaction on the news. There was a sell, and then somebody came back and bought it back, and that buying is done, and now it's just kind of like sitting here and settling back up where it was. So that doesn't really help us much in terms of where we might go next. That kind of suggests that we're just going to get stuck here, right? Well, except for that we just got 2 ticks up, so maybe they're going to test the other side of this. What's Dex and Hammer saying here today? The only Twitter alternative to ever achieve long-term stability and solvency is Gab. I believe Gab will exist long after Threads is either a ghost town, which at this rate will be a month, or is overall done away with. Maybe. Either way, the big order moved up to 13.5. I think that last move kind of destroyed what last little bit of hope I had left on this going back down to the lows, right? Okay, so I'm going to take the profits on that. I guess I could call it a scratch. So that still puts me down 9. Yeah, okay. We got 45 minutes left. So it's possible I could get involved again, but I would need to see something to really say to me like there's something really going on here. I think, like here again, I think I played that really, really well, but the exit wasn't very great. And, you know, when it's moving around so quickly, I'm not adjusting and figuring out what's going on quickly enough. So, I couldn't necessarily like say that was a mistake or anything. It's just kind of luck of the draw or something. But at the same time, I could do better there as well, right? So and we still got tomorrow. We might have, well, what do we got news-wise tomorrow? Yeah, it was a good potential. Like really with the situation and everything, I think it was justified to try and hang on because there really was a good possibility that they were going to extend. And I really, because of the micros and everything, I really did not get my price right. But that's kind of the problem over here sometimes. Okay, this week. CB consumer confidence tomorrow in Richmond manufacturing. Wednesday FOMC. Advanced GDP quarter-over-quarter Thursday, quarter PCE Friday. I see. Yeah, it is what it is. It's just, yeah. There's one of those things where, like, what can I actively change to do better in that situation is a little bit limited, I think, right? Like, getting the overall flow correct is good. You know, I had the direction right. And who knows? Like, look, they just came back there a little bit, so that would have been maybe a slightly better exit right there. Maybe now that I'm out, they're gonna just careen down to the lows. I shouldn't say things like that, because then when it happens, I'm gonna be so upset, right? So this is the thing that's bothering me about it. Right? I mean, there's this little thing here, but otherwise, pretty consistently down in the note. Right? So that's what it has kind of been saying to me, like, hang on, Seth. You're getting this right. You just gotta wait it out. And eventually this flow will pass. Right? I'm kind of, you know, concerned that we might get stuck here for a little while. Like, we haven't had a super clear liquidity hole yet, but if there is one, I'd say it's 14.5. You know, we could stay here for another 15 minutes or so, and then maybe they have to move. Jeez, yeah, that's... Nick Timmeros, key question for the Fed. If the long-anticipated slowdown in inflation is finally here, will it be enough to satisfy policymakers that they've done enough to durably subdue price pressures even if the labor market doesn't further weaken? Yeah, this is so frustrating, dude. Is that we getting something going on in the dollar here? Yes. I guess really the issue that we're having today, I think, is that I did have the edge and I was getting it right, but what we're making from it wasn't enough for me, right? And that may be partly due to the, you know, the head fake that we had at the beginning and everything, but see, now I could be getting out at that spot that I wanted to begin with. So that was a terrible exit, actually. That little push higher was just, you know, that was the end of it. I was like just freaking out that they were going to go and bust the highest and break out at 17 and everything. And I was like, oh, okay. This definitely is not going my way now. And then all of a sudden it flips and it wants to do it. And look at how quickly it comes. And the 5-year is giving up in volume, like, big time. There's a lot at 3.82 today. That's interesting. Look at that offer. It's looking weak in its iceberging. It's like all of a sudden, okay, we clear it. The dollar's definitely turning around here. It's like, as the dollar goes up, the treasuries sell, right? Now I'm seeing icebergs on the bits, so this is an area I want to avoid. As tempted as I am. Boring futures means, I don't know. I feel like today has been one of the more interesting days that we've had in a while, though, right? It's not like a clear win, though, right? Is what I think what you're looking for, right? It's like one side to just clearly blow out the other side, and yeah. I mean, I kind of thought that's what was going to happen, was that we would clearly start raising rates going into the Federal Reserve meeting. Apparently, it's not so simple. Because you did get that selling, but the price didn't necessarily shift. There's a 5K at 11 now, huh? I know, there is a 2-year note auction today, I mean. That could be a factor. Also, never really got any indication of why Bitcoin is falling, but the dollar has been incredibly strong. Back above 101. It's a big old iceberg there at 11. Right, so this is where people will be like, oh, okay, there's an iceberg, that's as low as it's going to go, I'm going to buy 11. Or vice versa, it's going to bust through, they're going to sell further. And probably what I think is going to happen is they might bust through a little bit lower here and then get snagged and pull back to 11. Because such big orders traded there. Okay, so it did go offer with about 7,000 contracts. Not quite able to get it to stay bid. And there we go. And that 5-year kind of floating up again. Although this time it's not so much market orders hitting it. You can see them hitting their 10 3/4. Uptick again. So even though they broke through, it didn't result in very much of a tail. That was very brief. Yeah, I'm afraid that having such a big iceberg there at 11 kind of says that we're probably done until after I'm done trading, right? Now they got slammed back across it to 10.5. Why are you... sorry, sometimes the heart covers those words. Why are you in love with Jigsaw's stock DOM color grading? What else would I use? I think that it's good enough that anything that I would change it to would not make any difference. So why put the effort into changing it? If there was something on there that I really wanted to highlight and made sure I see, then I would make it green, but that thing. This is tough because it is getting pinned to 11. You can see there, but there's been some pretty wild impulsive moves on both sides of this. So like you really don't want to commit, right? Like commit to it staying there because it really makes it look like it wants to get away from it. Darker. Well, but I feel like those colors are pretty dark. I feel like overall it's pretty dark. Certainly not white. I was looking at the BenQ website the other day, and they have a relatively new, or at least I hadn't seen it before, a coding monitor that had less flicker and all these sorts of things. So I was like, ooh. No, it's not. There's just one is the point of control and one is the volume profile. Well, it shows the point of control, volume, VWAP, and value area high and low. Either way, that tick right there just moved the value area low quite a bit. I think another side of this is that you definitely get there's an advantage to using the default because anybody that comes on the stream and wants to learn and everything, right, their DOM is going to look exactly like mine. Man, I should be frustrated because I took it off at 01 and it came up to 825. I could still be in it hanging on or getting out right now. So, I still, again, wouldn't call it a mistake. I mean, look at this, right? Like we got out. Come on, I hate it when it does this. Doesn't let me scale the chart the way I want to. We got out somewhere around here, right? So, no, maybe it was here. Either way, so like, you know, we didn't want to sit through this. We made the wrong call. We should have tried to get out on this somehow. And now that we've dropped down here 10.5, it's kind of, now it's, so like, if I was still in, I would definitely be getting out at 3825. That's not to say that I don't think that it will go further. It's just, I have 30 minutes left. Liquidity hole is forming. That's a good opportunity for me to just get out. Right? Because once you start to get those sorts of things, you're probably less likely to see more activity. Big market makers set the well, but they don't. Okay, but that again is like the problem with that kind of approach is that the market makers are, the kind of like by definition aren't making such a judgment, right? They're just trying to make money from the spread and they don't care which way it goes. Right. Like the thing that I'm trying to emphasize is that the reason why it feels like the trend in the price direction is rigged is because these meta orders are so large, right? Like I get into this in the volume profile video that you see at the top of the hour, right? Because auction theorists thought, okay, when a trend gets started, they will just keep buying and buying and buying until nobody wants to buy anymore. This is like the last buyers bought, they buy the high and then it's done, right? And that was their thinking behind it. Well, what's really going on? What's really going on is large meta orders are getting executed. And those meta orders are so big that they end up pushing the market much further than we ever dreamed that it would. It always outperforms our expectations because those orders have such a strong impact. Right? And that's coming from those not from the market makers, but from those informed traders that are, well, let's not even call them informed traders, but like those big institutions that are, rely on the liquidity providers being there in order for them to do their business. So what's happening to us is that we are getting those meta orders coming in. They aren't huge ones, but they are coming in. But, the liquidity is still a little suspect, and it's a summer and all of that sort of a thing. And so like when we get the trend and it comes back, it's kind of hard to like take a loser and then take a winner and get that out to be a really big one. If I had played, I think that the real mistake that I had made today was not on the managing the trade as much as it was when to get in. Because I could have waited for that thing against us and gotten in down here. Well, I could have gotten 3.8 from the very beginning, right? And if I had gotten 3.8 from the very beginning, then it would have been a much different thing. Maybe it would have been much easier to take profits here. Maybe I would have been much more willing to hold it longer, right? So they expand the range. Well, I think that the reason why you can say like the range tends to expand is because those people are out there taking out liquidity, right? So they just kind of slowly nibble at the edges and make the holes bigger. Why not dream it bigger? Oh no, we're going to do what's appropriate for our risk tolerance at the time. And, here until the market's kind of normalized, I don't think that I have a very high risk tolerance. Although there was a point there where I was thinking about doubling, like adding a contract. When it was doing well, and it started doing well, I thought about adding a contract, but I thought that like it had already gone too far. I was like, here's where I should be waiting for it to do another little extension rather than adding. Because if it doesn't work, then I just get nothing. So I should have added earlier if that's what I wanted to do. The amount of level 2 activity is still kind of giving me these like shenanigans vibes, right? Like there's more activity than normal, but it looks like robots to me. Because it's just like, you know, one thing will change and then you see flicker, 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 and then kind of stops, right? So this is like the robots are all reacting to each other. Yeah. Now the other side of this is that there was some buying. There is somebody buying like and absorbing this. I can't imagine what the driver is there, right? So somebody was asking me a question and I'm like, they're about the chart trader and I'm like, there they are. Touching 11 again. So there's another way of approaching this, okay? We're getting autocorrelation in terms of cumulative delta, right? Pretty consistently selling, but we are not getting correlation between price and cumulative delta. Price is moving much more wildly than what the cumulative delta would suggest. So in this instance, probably the way we could read this is it's a sell. Here we're selling and we've formed the liquidity hole. So starting from this point right here, which was about at 820, we could say start the timer and say sometime after 9 o'clock, 9:15, we could get another meta order sell, and that it might be worth trying to go sell from that point because we are seeing the meta order, right? And for me, probably should have held on to it, but it's understandable not to when they're not correlated. So exiting was probably the appropriate thing. Even though I could have wrangled out a little bit better of an exit. Gotten $10 out of that somehow. Now that said, it is looking a little heavy. Today's video should be good. I did spend a lot of time on that video. I think people will be interested in it. Where is it? Let me grab the Guess I have to go to YouTube Studio to get the link. Nope, there's a tick down to 9.5 with a good offer. What's this? What is this? Affirmati. So the market has repetitive, fractal, deterministic nature. Do big banks have free will to move it? Big banks have free will to do it, but when they do so, it will exhibit certain kind of patterns. So there's an optimal way to move it. And they don't want to move it. They would rather they not move it. Yeah. What is my expectations for this Wednesday? That's a good question. Thank you, Lucas. So I am concerned that the Federal Reserve could come off as being viewed more hawkish than they would like. So the headline that we got from the Wall Street Journal and Nick Timros this morning was that there's an argument in the Federal Reserve that you're really not going to be able to keep things to 2% inflation unless you get a real recession. And I kind of sympathize with this argument because it really seems to me like that just as it seems like we've gotten inflation under control, I'm starting to see other things going off in the economy that suggests that inflation could come back very, very quickly, right? Like speculation is coming back into the market very, very quickly. I shouldn't complain. I'm a speculator. Excuse me. I'm having a hiccup here. But, you know, the way that it just turns on into like insane levels in the stock market so quickly, it's very concerning to me. You're seeing some of these things like this manufacturing data is turning back around very quickly. And there was supply side stimulus on that side that's still in effect and is going to be going for a little while. So we have a couple of things that kind of says that, oh yeah, like we're going to grow. And there was a lot of growth factors that weren't considered before, right? So it just seems naive to me that inflation is back to its target now and mission accomplished. I think that's too easy, right? And I think that the Federal Reserve is going to have to make sure that the market understands that on Wednesday, right? But at the same time, the Federal Reserve does not want to come and rock the boat, right? They don't want to come in here and be like, oh yeah, we're going to raise interest rates like 3 or 4 more times and like this is really bad, and you know. They're going to try and placate the markets and convince them that everything is fine, right? As they always do. But I do think that message that's going to be in there, that there's still this question, is going to come up. So where that places the markets overall, I don't know. I do have kind of an inkling that interest rates will probably move higher by the end of the week, though. How I would put it. Black, the state of YouTube Shorts 2023. So you know what? I really should make more TikToks because I just shouldn't put them on TikTok. I should put them on YouTube. And I should just like focus purely on YouTube, because I think what's really happening is that TikTok is primarily promoting people that are using their store. That's what I think is going on. I think that they've hooked everybody in with like the good algorithm. Now they've got the money-making algorithm. By the way, there was some buying in that last little impulse coming up off of the lows, getting back to 11. Buys in the note. I live in a country where inflation is endemic. We have periods where inflation goes down, but then it comes back harder. Well, I doubt you will get a quality audience from TikTok. Well, yeah, and that's the other side of it, is that the TikTok, I mean, I don't know if YouTube will be any better in this particular respect. I think that YouTube has been really good at for this live stream, finding us a good audience and a serious audience. But for the YouTube shorts, you know, I think that you get a lot of people that will try and misconstrue what's being said and say all sorts of crazy things, right? Like, this is kind of like my larger battle with social media as it pertains to finance, is that everybody has an opinion of the Federal Reserve that colors what they're saying so much that you really can't trust their analysis, right? Especially on the conservative side. So, you know, you get anybody that's even remotely conservative, they want to end the Fed. And so everything that they see about the Federal Reserve is just, see, this is how this is going to lead to the Federal Reserve eventually blowing up and we can end it, right? So, and you get that in the comments, right? Like, you can't just come in and say, well, government stimulus contributed to inflation. So they'll say, well, but was this thing? Well, look, it was like 5 different things, and I could go down the percentages of them by how much they were. I would say that the government stimulus is the one that's like the worst offender, in that it was optional and we warned against it, and it came after all of the other things, and we still did it, right? So that was one that was entirely preventable, but we still wanted to have it. And so now they want to insist that it had no impact, or it was a trivial thing. Well, it's not a trivial thing. Most people filter their political inclinations in their economic analysis, yeah. Well, when I get these people that, like, creators that I know that they're super anti-Federal Reserve, I just scroll past them, because such individuals almost never give you an actual tradable insight, you know, because ultimately they're not an influencer. Like, they're not an influencer there to help you understand macroeconomics and possibly find you better trades. They're an influencer to try and help people understand why the Federal Reserve is bad and get rid of the Federal Reserve, right? Well, we did move a little bit clip lower, but like, we've been sitting here at this 10 for a long time. And I didn't see where the volume was coming through when it came in long in the note, but it looks like there was some sort of an iceberg there at like 11. So there was a little fall. That might be the thing that we need to get this to go a little bit further. It sucks so bad, right? But what you gonna do? I would have gotten out at 825 anyways, right? So from the further it goes from here, I don't know if I should fret too much about, but I do feel like I missed out. I guess it was only $10-15, but still. It is bothering me because I feel like I guess it bothers me because I feel like we had a really good example here to learn from in terms of like reading the flows and everything else. Because like here again, if you know which way the flows are going to go, right, all of these other things come in and disrupt it and make it difficult to stay in it. But ultimately that guy, he keeps selling, right? So I think that there was kind of a test there that I failed. Well, who are we talking about now? Maybe he is an idiot with money? I've already like forgotten what I was talking about. There's another downtick there though. Like these are the prices that I wanted. This is like 8.3, yes. Okay. I could feel happy with 8.3. Kill the 10-year. Really kind of feels like it was fighting me, right? I mean, it wasn't fighting me, it was fighting the tape, but clearly the sell won out, right? Like in the end, I was right. I should have just been more confident in it, right? But how can you be like, I mean, you gotta say, like, really, to be confident through all of that noise that we had, that's rough, right? That was understandable that I failed the test, but I really probably should have just held it. Now we come down here, I think that there's a really good chance that we still kind of get sucked back up to 11 because they traded there for a long time. It's not insane, like 35,000 contracts is just kind of okay, but this is where the element of trading being a gamble comes in. Yeah. So even if we have actionable information, there's always something all it takes is one thing to come in and short circuit all of that, right? And in this situation, we had those PMIs. And so it's really fuzzy then to say, okay, does the PMIs really affect our larger trade? I think that I made a really good argument as to why it didn't, but at the time that I was making the argument, the market clearly didn't agree with me, right? The flows clearly didn't agree with me. But, you know, it stayed short that whole time. I must have been like a movement in the dollar probably was part of it. There's, you know, how was I to know that? You know, you can understand the market enough to say, yeah, this doesn't matter and you're going to continue to see selling flows. But clearly I needed a little bit better of a planning and thesis and numbers and so forth to keep me confident in a trade like that, because it was a tough one, right? Of course, the other thing that I could have done is I could have just gotten out before the news, or I could have, you know, somehow had gotten a good exit, right? If I was trading the full 10-year, I think that I maybe would have gotten an exit out on that. And then when it came all the way back up to the highs, maybe I would have taken it again, right? So there was ways to work this out. If you were really committed to the trade, right? But it is time to go. And look, we're going to have a long week, so it's probably good to not get too into it. I mean, some $9 loss today is a small one, and it could have been a winner, so that's okay. As long as what it would have been really bad is to have taken like 2 big losses and be down like $40 on the week, and then that would be a bad position, right? Because there's going to be plenty of more activity with the Federal Reserve meeting and everything. So I'll see you guys tomorrow. In the meantime, stay excellent, team.